Today's video breaks down the best stashaway long-term plan for anyone looking to build steady wealth with minimal stress. When investing long-term, the goal is simple: choose a portfolio that grows consistently, protects your capital during downturns, and compounds reliably over many years. Stashaway's general investing portfolios powered by ERAA stand out because they automatically adjust risk based on economic conditions. This means your money isn't locked into a fixed pattern, it shifts intelligently as markets change. For long-term investors, the most effective plan is the stashaway general investing portfolio with a medium to high risk level, often between risk index 18 to 26%. This range allows you to benefit from strong equity exposure while still maintaining stabilizers like bonds and commodities. Over long time horizons, equities historically deliver the highest returns, and this plan ensures you stay invested in growth assets without exposing yourself to reckless volatility. The beauty of this approach is its automation. Every dollar you contribute is allocated using economic data rather than guesswork. When the economy heats up, the portfolio adjusts to reduce vulnerability. When growth slows, it positions you to capture future rebounds. This smooths the journey, limiting emotional reactions and helping you stay disciplined. Consistency is crucial. Setting up monthly contributions ensures you steadily accumulate assets regardless of whether the market is high or low. This dollar-cost averaging reduces the impact of short-term fluctuations and accelerates compounding. Over years, small recurring deposits grow into significant wealth. The stashaway long-term plan is not about timing the market. It's about staying invested in a diversified, professionally optimized portfolio that compounds over time. With disciplined contributions, intelligent risk management, and a focus on long-term growth, this plan gives you a reliable path to building wealth in dollars with clarity and confidence.